What if the entire global economy, the pensions, the mortgages, the stock market, the currency in your wallet, was operating on the same basic principle as a criminal pyramid scheme? You know how a pyramid scheme works. You recruit people, who recruit more people, and money from the new entrants is used to pay off the people at the top. The scheme works perfectly, until it doesn't. Until the base can't grow fast enough to support the top, and the entire structure collapses, wiping out everyone at the bottom. Now, what if I told you that the single most important product in our modern world, the very lifeblood of our financial system, is not a physical object, not a technological innovation, but debt itself? And that this system of perpetual debt creation requires an ever-expanding base of new borrowers to prevent a catastrophic collapse? This isn't a metaphor. This is the mechanical reality of our monetary system. And you are not just a participant. You are an essential, unwitting investor in the largest, most sophisticated pyramid scheme in human history, and it's hiding in plain sight. To see the scheme, we first need to understand its core mechanic. In the 1920s, a man named Charles Ponzi became infamous. He promised investors huge returns, not from any real profit, but by using money from new investors to pay the old ones. It worked, as long as the flood of new money was exponential. Now, let's look at a modern bank. As we've explored in previous videos, banks don't lend out existing money. When they issue a loan, like a mortgage, they create new money digitally. This loan is an asset for the bank, and your promise to repay it with interest is their source of profit. But there's a catch, a fatal flaw. For every new dollar created, there is now a dollar plus interest of debt in the system. Where does the money to pay the interest come from? It can only come from one place. More newly created debt borrowed into existence by someone else, somewhere else in the economy. The system, by its very design, requires perpetual, exponential growth in debt just to avoid collapsing under its own weight. This was the original sin. And in 1971, we poured gasoline on it. When President Nixon severed the US dollar's last link to gold in 1971, he didn't just create fiat money. He removed the final physical limit on the pyramid's growth. Money was no longer tied to a finite resource. The bank's ability to create new debt, the fuel for the pyramid, became almost limitless. The pyramid could now grow from a national scheme to a truly global one, and grow it did. The pyramid needed new layers, and it found them. First, it was consumer debt, mortgages, car loans, credit cards, then corporate debt to fuel stock buybacks and expansion. But the most crucial layer, the one that keeps the whole scheme from immediate collapse, is sovereign debt, government debt. Governments, needing to spend more than they tax, issue bonds. Central banks and commercial banks buy these bonds, effectively creating new money to fund government deficits. This creates a beautiful, vicious circle for the pyramid. Government spending injects new money into the economy, which finds its way back to the banks, which can then create even more debt. The government and the banking system became codependent architects of the ever-expanding pyramid. In 2008, we witnessed a dry run for the collapse. The pyramid's base, the subprime mortgages, proved to be fraudulent. The new entrants couldn't pay. The flow of money upwards stopped. The entire global financial pyramid teetered on the brink. This was the system's warning shot. So, how did the architects respond? Did they dismantle the pyramid? Of course not. They doubled down with the greatest financial bailout in history, quantitative easing. Central banks created trillions of dollars, euros, and yen out of thin air to buy up the bad debt and government bonds. They didn't fix the underlying scheme. They simply used newly created money to recruit a new, massive, artificial layer of investors themselves to prevent the collapse. They reinforced the pyramid by adding a new, synthetic foundation made of pure currency creation. This is not a theoretical model. This is the cold, hard reality. The global debt pyramid is now over 3 times the size of the entire world's annual economic output. It is a mathematical impossibility for this debt to ever be paid off in sound money. The scheme is now in its most fragile state. It needs more and more debt, faster and faster, just to stay upright. This is why you feel the pressure. The relentless push for economic growth at all costs, the inflation of asset bubbles, the erosion of your savings purchasing power, these are not bugs. They are features of the pyramid scheme demanding its next fix. Your future earnings, your children's future labor, are the intended base of new entrants required to keep the payments flowing to the top. You cannot stop the pyramid, but you can refuse to be its foundation. You can build your wealth outside of it. Here's how. First, see the structure. Stop viewing debt as a simple tool and start seeing it as the pyramid's building material. Your goal is not to accumulate the most currency, but to escape the system's gravity by owning real, productive assets that are not simultaneously someone else's liability. Second, become the bank, not the borrower. The system is designed to transfer wealth from borrowers to lenders, from the bottom of the pyramid to the top. Your strategic goal should be to become a net owner of income-generating assets, whether a business, intellectual property, or productive land, that make you a recipient of this flow, not a source of it. Third, hedge against the collapse. All pyramid schemes eventually fail. The question is when. Prudent individuals don't bet on the scheme's perpetual survival. They insure themselves against its failure. This means owning assets with no counterparty risk that exist outside the traditional banking system. This is the historical role of gold, and many see it as the potential role of decentralized, non-sovereign digital assets. A system that requires perpetual exponential growth on a finite planet is not a sustainable economy. It is a cult of growth headed for a mathematical certainty. The 2008 crisis was not the exception. It was a preview. This is not a call for panic, but a call for awareness. The most dangerous person in a pyramid scheme is the one who understands it's a scheme. If you're ready to see more of the financial world's hidden blueprints, to understand everything from the secret tax of inflation to what truly holds its value when the system resets, then your financial education is not just an option, it's a necessity. Subscribe and hit the bell, because we are dismantling the world's biggest illusions one video at a time. In the comments, tell me this. What was the moment you first started to suspect the system was rigged? Thank you for watching. Stay skeptical, stay educated, and build real independent wealth.